Hi everyone, Andy Yu here from Jurong East Investor Center. Okay, so today what we're going to talk about is this stock called Keppel Infrastructure Trust. Okay, so why are we talking about this? Is because my client actually asked me about whether he should be looking at the Keppel Infrastructure Trust as the share or he should look at the bonds. Okay, because he's considering of getting the bond. Again, okay, disclaimer, okay, this is just analysis, okay, of my opinion, and there's not, it's not a right or wrong thing to choose whether this or even this stock is good or not. Okay, it's just basically an analysis whether I prefer the bonds or whether I prefer the shares. Okay, and how should you decide? Okay, so first of all, okay, you go to Poems, you go to News and Research, you go under this stock analytics. And what we're going to do here is we're going to pull out this Keppel Infrastructure, okay, Infrastructure Trust, the information, and to know what they actually do. Okay, so Keppel Infrastructure Trust. Okay, let's click on it. Okay, so what do they do? Number one is they basically they got 5 segments. Okay, their business consists of 5 segments. Number one is gas and concession, power, electricity, and corporate. Okay, so the gas segment is engaged in production and retailing of town gas and retailing of natural gas in Singapore. Okay, so the concession segment consists of desalination plant, water treatment plant, waste to energy plant in Singapore, and the power segment consists of tolling arrangement for power plant in Singapore. Okay, electricity segment operates subsea electricity interconnector in Australia, and the corporate segment is in investment holding, asset management, and business development, okay, of the Keppel Infrastructure Fund Management Private Limited. Okay, so basically, okay, this is a business trust. Okay, in short. Okay, so basically, and this Keppel Infrastructure Trust, you can see that the market cap is 2.5 billion, and the annual dividend is actually a 5.62%. Okay, 5.62%. So okay, so is this stocks good or is it not so good? Okay, that depends again on how you see it. For me, I would say I will compare with other like a similar type of trust. Okay, so basically, if you got a choice, okay, will you buy a business trust or will you buy a real estate investment trust? Okay, so right now the trend, I would say that the trend is actually in the real estate investment trust, and business trust usually comes with a higher risk. Okay, higher risk as in the price volatility and the price movement might not be the same as the market. Okay, so over here, okay, so basically this what we call this sector, okay, for Keppel Infrastructure Trust is under utilities, is under natural gas. Okay, so how does it perform in the past few months? Okay, so basically there's a financial summary over here. You say that for 6 months ended 30th June 2019, the trust revenue increased by 300. Increased from 300 over million to 736 million. Okay, so of course, okay, revenue up is actually always a good thing. Okay, and especially high percentage volume up from 300 over million to 700 over million. Net loss applicable to common shareholder totaled 251,000 versus income 300 over 3.5 million. So basically the loss and income is actually due to revenue reflects an increase in demand for the company's product and services due to favorable market condition. Okay, so overall it's still a net loss. Okay, so because of the operating expenses, increased from 22 million to 71 million. So again, financial summary don't shows that this is like a like a super good company. So it's basically more of a steady, buy and hold for dividend type of company. Okay, it's not a growth stock. All right. So again, who actually owns this what we call who is the shareholder of Keppel Infrastructure Trust? Okay, so is this a dangerous counter that everybody should be avoiding? Okay, so usually what I do here is I look at the shareholder list. Okay, so over here I can see that Keppel Corp owns 18%, is the largest shareholder, followed by Temasek Holding. Temasek Holding holds 15.9%. So again, if we look at Keppel Corp, okay, Keppel Corp is 21% held by Temasek. Okay, so again, this is a Temasek holds Keppel Corp. Temasek also holds Keppel Corp Infrastructure Trust. Okay, Keppel Infrastructure Trust. So with all these big players, with all these big funds or big companies behind Keppel Infrastructure Trust, more or less, okay, the fundamentals of the company, that there is some due diligence being done by all these big corporation, right? Okay, so it's not too bad company. It's not that bad. Okay. So the next thing that we want to consider, okay, when you talk about all these, like what we call whether you are talking about bonds and this what we call the trust, the share price, okay, is basically the volatility of the share price. Okay, so if you look at this Keppel Infrastructure Trust, right, you can see that the price movement, okay, since 2018, you can see that it's 52 cents, then it dropped to 44 cents. So 52 cents going to 44 cents, and then go back up to 52 cents, and then it go back down to 46. So you can see that the movements is like 10% up and 10% down. So the question number one is, okay, do you want to have such a big fluctuation? Okay, so that's question number one. So for people who buy bonds, okay, usually they have, they are trying to hold for long term, so they are not really concerned about this what we call the fluctuation. But people who are actually buying shares, then that would be a concern of whether now it's at the high side or whether it's at the low side, and whether the difference between the what we call the bonds interest and the shares dividends, does it worth that risk, the fluctuation risk? Okay, so Keppel Infrastructure Trust, just now we say that the stocks, okay, the dividend yield is about 5.62%, and then the bonds, okay, is a perpetual bonds, is actually 4.7%, so around that 4 point something. So basically the difference is only like a 1%. Okay, but the fluctuation of the share price, you can see that it's actually 10%. So for this case, okay, if you ask me, you're comparing whether which one you should be going for, I would say that if your objective is to hold for let's say for dividend, for interest, and basically you shouldn't then I would say that basically the bonds is slightly better because there's less fluctuation and the interest is fixed. So if you buy in at $100, it's at 4.7%, then this will be fixed, okay, whether or not the market is going up or is going down. Okay, so yep, that's what we call that's all for today's session. So if you want to get bonds, if you want to know more about how to invest in bonds, we also have a WhatsApp broadcast for bonds. Okay, so if you are our bonds clients, okay, just PM us, let us know that you want to receive all these bonds updates. Okay, so if you are interested with any other topics, please feel free to comment below so that we know that what is the next topic we need to do for video for you. Okay, so thank you for watching this. We see you in the next video. Thank you.